Hi, everybody. This is Bitcoin Live. Today is August 7, 2025. I'm here with Costa and Marcos from Minotaur Trading Systems. So this is our usual show where we go a little bit, we dive in the Bitcoin action. We look at different type of indicators, basically based on the power law, and also we look at both global liquidity and local liquidity. So let's start with the power law indicators. Let me update my chart and upload it. Just give me a second. So we had quite a bit of action today, right?
Yeah.
Oh yeah, moving day. Yeah.
Okay.
Nice to see if we're going a final sweep down or if we're just going to keep going up.
Yeah. So okay. So let me give you an overview. Okay. So like always, you can look at some of our previous episodes. We introduced this model. This is a typical power law where basically we recognize a relationship between the time and the price. That is basically a simple formula, right? We are saying that the price is proportional to time and a power of time, about a number close to 6. So this is the white line that you're observing. And the gray line is one of the things that is very fundamental to our entire enterprise because we are having a trading system that uses this support line, we call it, where basically it can be calculated in many different ways. Probably the simplest way is saying that it's about 60% away from the power law, from the white line. And you can see how this line has caught all the major bottoms that we had, in particular, even during COVID here. This is COVID. We arrive here and then we bounce back. So it's a point of reference because historically we never crossed that line. And so it's very good to have any type of asset that follows precise rules like these. And also we have this upper orange line that is the K channel. So basically, still follows the power law, but in addition, we are adding a decay that is exponential from the peaks. And this is, and you can see if you do that, all the major tops are linked together. So these are our point of reference that we have to understand the price. Now I added also these oscillations that are periodic oscillations of about 4 years. This is all what it is. The way we can synchronize these peaks is simply by choosing a particular shift that includes the first oscillation, and then all the other are included automatically. Now, if you extend this idea to the current cycle, you get this bubble here. So I explained this so many times, but because this comes out again and again, I want to say one more time. The blue model is not part of a power law model, or at least you can think of it as a secondary element, right? It's something that we add on. We say, look, really the general behavior is this long-term trajectory. There are deviations from this trajectory, but in average, they kind of cancel. But if you want to go deeper, now we can look at how these deviations are characterized. And you can do it using the power law because you subtract the power law, and then whatever is left over, you can fit it and you can describe it and characterize this oscillation in terms of a deviation from the power law. It's the best way. Everybody, almost all the other indicator that you find out there, even the on-chain ones, are actually possible because these things exist. People don't recognize them. I'm going to write eventually an article. Bitcoin, because as these regularities, then shows as regularities in other indicators that people say are not related to the power law, but they are. Absolutely, they are. So the best way to describe it, deviation is using the power law as your reference, and then you subtract the power law, and then you describe it. And you see regularities. One of these is exactly what I explained before, that we have this support line. Another one is that there are very precise deviations upwards from the power law. They have all very precise characteristics until, let's say, until now. This particular cycle, if it followed the others, it should behave like this, like the blue line. It doesn't. So this is not a failure of a power law model, because the power law model, if anything, is becoming stronger and stronger, because anytime that we actually deviated, that was a challenge to the power law, right? And it works over a long period of time, simply because as we deviated up, then we started to go down and correct. And in average, turns out we still follow the power law. But what is happening right now, the story that seems to unfold, is not finished, because we will have to look at the end of a cycle, right? When we arrive to the peak, because my way of describing the cycle is peak to peak. It's convention you can use anywhere. Some people use halving, etc. I like to think top to top. If you look top to top, right, we have still few months ahead of us, but we're coming small. This time is became smaller and smaller. So it's still possible to have like a huge big spike and reach that 200K. Now, there are people like this Jim guy, Jim the Prophet, that says 444K within 2025. I say it's becoming more and more unlikely that we reach 200K, 400K. 200K is still possible, but 400K, it's not impossible, but Bitcoin will have to do something really amazing. 400K is all the way here. If I show you this in a linear graph, you can see how very unlikely that value is. It looks like it's very, very far away. Now, from what we are observing, so basically we started to go inside this bubble in this red region, right? So it started in in November, and I even predicted that. That was exactly like everything else. You see, it really did what it was supposed to do. It started the bull market around November, and we stay there for all this time. And this actually November is years when we start to leave a power law, and we start to follow this bending curve in November. This is when this happened. And then we cross the power law, we stay above the power law for a while, but here in this region, then we had a correction. So this is a story, right? I see people still being confused about this. Yes, this is a model that we will have followed if everything happened like in the previous cycle. It's not happening. What is happening is, even if we wanted to leave a power law initially, we then got corrected, we attempted again, and now we are simply fluctuating around the power law. We had this push upwards that looks very much, very similar to one that we're experiencing now. When the price stabilized it, we corrected, we went where? Look at this, exactly to the power law back. And now we are leaving again. I don't know what is going to happen next. We can analyze it. But to me, it seems that there is some stubbornness from Bitcoin to actually follow almost to the letter the Bitcoin power law itself. That is incredible. I don't know how to interpret it, because usually we do need this kind of almost like release valve, right? Relief valve to have some kind of bullish behavior and then a correction, and we are not seeing that this cycle. So this is my analysis of a situation, and I wanted to again verify one more time that it is not like a prediction that I am attached to. I'm simply saying that if everything happened like in the past in terms of how the deviation express themselves in terms of the power law, this is how it will look like. We will reach out, we have an exponential behavior. It should have been an exponential behavior since November. We should never have gone below the power law. We did. So this cycle is definitely different from others. Could it still recover and go to 100K? I say it's becoming more and more difficult, even if not impossible. But so far, I see, if you take seriously the data that we are observing, it's simply that Bitcoin likes to kind of follow the power law. You can see that how amazing it is. In fact, you can go all the way here, where it seems that we are following with some small deviation very closely the power law. All right, so this is my analysis. Maybe we can come back later and look at the global liquidity, but let's look at first at the local liquidity. So I pass the microphone to Marcos. Okay, Marcos.
Let's see what we got here. I accidentally closed the page. Let me reload it. Give me just a second here. All right. Okay, let me share my screen. Let's see what we got here. We're moving. I hope everybody.
I don't see your screen.
Yeah, I'm loading it up now.
Okay.
I hope everybody's got their boarding passes ready to.
It better be last time. I don't know.
Yeah.
You did say that we were going to visit these lower levels, right? And then I think of a train got loaded, right? Of
we gotta
fuel.
Get your bags packed. You get one carry-on on this flight. So let me. I have about 5 screens in my office. Let me get the right one here. You don't want one of these screens you don't want to see. All right, here we go. Here we go.
Now we want to see it. If there is alpha, we want.
The first words is you, but not tube. All right, here we go. All right. So I always like to start with just a regular trading view chart to kind of hone the visual or representation here. I like to make complex things very simple. If it can't be simple, then it can't be effective. We overcomplicate things. So this is a very simple chart of Bitcoin, and you can see there's some very visible patterns here where we have tremendous institutional activity. That's institutional activity, and the institutions are. It's kind of like if you're an elephant, you can't hide your moves. They're very pronounced. So there's liquidity accumulation in these areas here. Accumulation. So what do you do with accumulation? I'm going to show you now, and that is the precursor of what we can expect, because the business is very simple. You buy low from forced sellers and you sell high to forced buyers. It's just as simple as that. All right, so what we're looking at here is this range that we've been breaking out of here, and recently, since last week, we have this price action here. So what that price action is telling us is, and this is on the daily chart and the perpetuals, um, we were accumulating. This is all accumulating. There's a lot of accumulation of liquidity that has been forming in this range, and the institutions create these beautiful ranges for us. They create that range where all these traders are betting on longs and shorts, and they get their composition, their liquidity gets added above and below the range until it's time to harvest. So they made the move last week, and they went through this accumulation phase, and now when you accumulate, right, you have to do something with that inventory. So what do you do with the inventory? You move it up here. These are forced sellers. They're forced to sell low. You finish accumulating, you start moving it up here to these locked in forced buyers who are going to buy it high. Now, here's an interesting observation that I wanted to show everyone how methodical and simple it actually is. The problem is most traders or some short-term holders or investors are just not patient. We get very, very impatient, and that puts us in the hands of the market makers. So right here, we can come back to when this particular range started about 7 months ago or so. We had this accumulation here, and the market is very fractal. It works at all time frames. So we're looking at the daily, and we had this massive accumulation phase that went on for about 2 months, and then they bring that accumulation over here, and this is the area where it was they bought here and sold it here. I know I need to probably redraw that a little bit, um, but they sold this accumulation that they got here, and they moved it here. So I'm going to move that right here. So that's where they sold it off. And then they stopped. They weren't ready to take this because they got to rebalance their portfolio too. They can't get too extended on one side. So this washes this, right? So now when we went through this consolidation phase in May for 2 months, they accumulated here. They accumulated here. Where did they take that inventory? They took that inventory right here, just from here to there. And then they stopped, because that was a massive amount of liquidity right there of forced buyers. And I can back off and show you a little bit more about what they picked up. They picked up a pretty good amount down here, right there, and they moved it over there. So now this cancels this. So we're even again. So how do we know that they're even? You can tell by you can tell by their activity what they're doing. So when they consolidate, they're rebalancing their portfolio and preparing for the next move. That's what they're doing. So right there, we got a new range to do what? Acquire new forced sellers inventory. They pick that inventory up right here. First, they built it first, then they harvest it. And what do you think they're going to take it? They're already showing you. They're going to move it right here, right there. So that's already happening right now. That's why I say get your boarding passes, put your tray tables in the upright positions, because we're moving here. That's where we're going. Now, here's where it gets interesting. I can hear some people in their thoughts saying, well, that's not the whole move. You're right. It's not the whole move. That only gets us to right here. This is level 2. Level 1 was here, and then level 3 is up here. So that doesn't get us to level 3. So what do? So once we get up here, we have the last level, this level 3, which is 3x. That's going to be liquidated as well. It's going to be harvested. Now, where do they take that? Here's where it gets interesting. I'm going to draw out the potential here, what could possibly happen. This is very promising. I said last week, this little isolated pool will more than likely fill in like this. It's going to fill in real nice. So typically we might go an additional, like we did last breakout of this particular fractal, we went 20%. So that takes us to 85. I'm going to start right there. So there's the price discovery phase. And then when we get there, we'll start ranging again. Start ranging. So then at the top of this phase, then we'll have to create new liquidity up here, right? There'll be a new pool that gets developed. There'll be one here, and we'll have a new volume profile there. So what happens to that liquidity? That's why I drew this out, to show you what happens to this piece here. This liquidity here gets moved over here, and it cancels out, and its process starts all over again. It's the same process on all time frames, because it's a very simple business model. Now let me show you the historical where that happened last. We'll come over here to the last breakout. When we took the 3x, the 3x, it went so violently they didn't have a lot of chance to build much. But this was the 3x up here. And where did they take that? There was nowhere else to take it up. So they brought it over. They brought it right over here. That's where it got put. So that completes your process right there, ladies and gentlemen. That's how this game is played. And if we know that, then we need to trade accordingly to the signs that are in front of us. It's not difficult.
So you are saying there is a hope.
Well, yeah, I mean, here's the thing. Another very,
go
very important
close to
sign is that once liquidity is started right here, they are harvesting this massive amount of liquidity. There's like a 90% chance that once they start, they finish. They finish it. They don't get in the middle of it and then leave this behind. They finish the liquidity. So finishing it means if you're going to finish this, you're up here, right there. And then typically we get a price discovery, right? Because when you get in a new range, you have to discover a new range. You have to build it. Now it can stop here, but typically it goes a little bit beyond, as we can show you right here. Once we get to the top of the pool, once we finish liquidating the pool here, we discovered we went an additional 20%, and then we created a new range with liquidity starting above and below again. Process repeats itself. So we bring that same process because it's not going to stop. Just because some people discover what's going on, they're not going to change their business model. It's been going on forever. So when we complete this here, we're going to enter into a new range. It could be 20% higher in discovery, or it can flatten out. But either way, worst case scenario, if it flattens out, you're still in the 150s, 170s. But if it does what it did last time, you're in that magic twilight zone there, banana zone of about, up to 200K. So it's definitely in the cards. Definitely in the cards. And what I love
I think
about, yep, go ahead.
so. I was going to say it's it is good to see. I guess a visual blueprint of existing interest that can get us to that 200K target, right? Otherwise, it would feel a bit more pie in the sky because you're saying, Giovanni, it's kind of like a bookmark, right, based on the past cycles. Whereas
right.
what we're getting here is a story and a narrative that can get us, at least pretty close. And let me ask you a question, Giovanni. If it got to 160, let's say, and that was the top, what would that just be a fourth data point now for you to adjust the decaying?
Yeah, I mean, when I say 200K, right, it's never, and that is, people are so funny because, most people don't have math backgrounds or understanding, and in that, it's almost like a superstition thing. Like, for example, if imagine I say 200K and the price arrived on December, whatever, the end of the year, and it was $200.01, something like that. Or, people will go crazy and think of it. I was a magician, etc. Right? And if it went to 203, well, okay, they will be excited. But if it went exactly to 200.00, they will go crazy. They will think that. And it's so silly because it's basically the same prediction. It's just that by luck, I play a lot of these games where you have to throw dices, like Warhammer. It's luck. When you get a 6, people pay attention. When you get a 3, people don't pay attention. It's the same probability to get a 3 on a 6. So it will not be very different as a prediction. Now, if we talk about 10, 20, 30% deviation, it starts to be less precise because, these predictions that we are mentioning, like, for example, you could have used the first 3 data points in the decay, in that orange channel that I described, and predicted the 4th one last cycle within what? Within probably $10,000. But it's still amazing if you're thinking there were people like Plan B, for example, that was claiming we were going all the way to 100K. Right. You could have said that is basically almost impossible. Like I'm saying, that is basically almost impossible to go to 444K, 4,000K. That is a ridiculous prediction. Now, is it possible? Nothing is impossible, with math and science. Nothing is impossible. You have a very rare event and crazy things. So under 70, under 40, under 70, under 60, it's only 30% deviations. And talking about a very, very volatile area of Bitcoin activity, it's within what is possible. Absolutely. Now, 130 is what the power law says. We are going to 130 no matter what by the end of a year. So we have this window between 130 to 160 where you're going to see some additional volatility, right? So
yeah, I mean,
it's very possible, you know,
we
that
have
we achieve that range by simply adding a little bit to the power law, like we are seeing right now, right? We do see 5, 10, 15% deviation away from the power law, even now. So right now, just to give you a feeling, let's look at the chart of how much we are right now, or even what was the largest deviation we had so far in this bull market from the power law. We had, so for example, when we were at 120, when we were at, let's say 121, right? When we reach about 121, during that time, the price was supposed to be 110. So 121 over 110, you know, it's about 10%, right? So yeah, you can have 10% deviations, and that will already bring you to 140, 150 quite easily. Now, anything above that, you know, it's still achievable. Now, the problem with that is at 200K peak, you're going to recognize it both in terms of a location and how big of a deviation is as a possible peak. If we go to 140, 150, or even 160 at the end of the year, when the reference price is 130, will you still call it a peak? Now, you know, because it's important, because there was a debate and some level of debate and discussion about what to do. You know, should you rebalance your portfolio, for example? You know, should you sell some of your Bitcoin with, in that case, almost a hope that there is a correction, and actually rebuy at the bottom, right? Because if we follow the pattern, we went to 200K and then we went to 70K, and you knew that was going to happen, the rational investor should have, in theory, sold all of his Bitcoin, right? If that was a certainty. The problem with any type of investment and with these kind of things, this is why we are here in the first place, is that these are not certainties. You know, there is just a range of probabilities, right? And I would have felt much more confident if I saw the same pattern that we saw in the previous cycles. We stay above the power law, we didn't have any major corrections, we follow an exponential pattern, we reach 200K. Then at that point, I will have said, look, you know, everything looks exactly like before. We are expecting a peak. This is the right time. This is the right deviation. This never. Many people don't understand that. Like, for example, Plan B, and at a certain point, was making fun of you know, the power lowers. You know, the people that follow the power law, because he was thinking that once we reach 200K, we will sell, and he and other people were predicting that we were going to 1 million this cycle. You know, no, that we never say that. If we reach 200K in February, we will not have said to anybody to sell, right? If we did it in November of this year, you will have to sit down and consider the situation. That is what is, you know, previous cycles did at that point. The deviation at the right size, it was at the right time. There were many other indicators that pointed to some kind of major correction. Now we have even more tools to demonstrate, right? We can look at liquidity, look at global liquidity. There is no sign that the global liquidity is correcting very hardly. We have a 3 months ahead vision, because it's supposed to be about 85 days. There is this delay. Once we see some major corrections in the global liquidity, that is another piece of information to include. Right now, you know, if we see something like close to 150, 160, I think the major action to take is maybe to buy some options, you know, some put options, very far off, you know, very far away from the money, something that you can buy very, very cheap. And we can discuss when we arrive there some of the possibilities that we have ahead of us. But now we have all these tools. You buy some options at a very, very low price, because you're predicting something like, you know, 1 year ahead of time, we go down all the way 50% of the price. Imagine we have a 50% correction. Probably that option is going to be sold very, very cheaply. And you can buy it almost like an insurance policy, because if there is a major correction of 50%, that option will make you good money. And so that is my major suggestion at this particular point, given that this is so different from other cycles. Now, I see some of the comments. We can go through the comments one by one about extension of cycles. Maybe there is a peak sometime in middle 2026. Okay, let me say something about that, because again, it's one of these philosophical discussion, right? That is something that, for example, Plan C, we have all these plans, Plan C that has a lot of followers is pushing that idea that there is some kind of extension of a cycle, or maybe there is not a cycle, etc., or cycles are irregular. And no, so if you will never be able to say that something is a cycle if it was irregular. The definition of a cycle is that it's regular. Imagine the seasons could happen all over the place, right? We know when to plant the harvest because you do it at a particular time, month of the year. In fact, at a certain point, there was a confusion with calendars, many different calendar people use, and it turned out, because we were not completely aligned to the solar cycles, that they were shifting. So many years later, you will have an harvest time in March, and then 20 years later, it was going to be in November. Well, they did a big, huge reform. They reformed the calendar, and they adopted a calendar that has the leap year, etc., that kept that synchronization, okay? Because it's essential to know that a cycle repeats at the same time. Otherwise, it's not a cycle. How will you ever know that you reach a peak simply because, okay, there is a large deviation? You don't know large deviation relatively to what, right? Well, it could be simply that it's a correction, and then we still go up, right? You don't know that it's the top of a cycle unless you have a timing element. The timing element is essential to call something a cycle. So I don't know what it means to extend a cycle to a certain time in the future, because based on what? Why will you say that this is the peak now, 6 months later? Based on what idea, right? The main idea that we have about cycles, that they are periodic. They could have some irregularity. You could say, okay, they are periodic up to maybe 3 months. They can happen 3 months early, 3 months later. That is acceptable. But there has to be some kind of regularity in the cycle. Otherwise, we don't have a cycle. So all this talk about extended cycles, super cycles, are people that don't know the language and they don't know the terminology. When you push them to explain how they will define the cycle, how do they know that the cycle will have this length? They don't know how to explain it. It's all arbitrary. So
yeah, that's a really important point. Is that everyone's making all these adjustments to their predictions, but they are all gut feelings. No one's backed any of these. We think the treasuries are going to do this, and I feel like this cycle's cycle agnostic, but based on what, right?
Exactly.
Time
Yeah,
agnostic.
psychoagnostic, then you would
just
say,
opinions.
well, I'm relying on how big the deviation from the power law is. If we reach too much of a deviation, then probably there is a correction. But that is true for any deviation, right? There is no reason, even there, the fact that we say, oh, so far we never went more than this and this amount away from the power law. Well, that is based on previous data. When the cycles were regular, there was a decay in the cycle. It's all information based on past behavior that is not repeating again. So why would you even ascribe any importance to the fact that we are, on the 99% quantile? Well, that is based on previous information that is not followed anymore. The only thing that seems to be followed at this point is the power law and the support that are our foundation. This additional idea that there was some regularity in the cycle seems to be degrading over time, that now cycles are basically dissolved. I will say that if we don't have a regularity that we observed before, we don't have a cycle, period. Now, does it mean that we skip a cycle? Sometimes can happen, right? It can happen that things that do have cycle, sometimes they skip a cycle. Of a cycle doesn't follow the regularities of a normal cycle. That is possible. But then, to talk about cycles, you would need to reestablish a cycle. Maybe the cycle became 2 years long, or 5.3 years long, but we'll need several cycles before we know that, right? Because how do you know that there is a new cycles unless you had a few of these oscillations? Like this, why, for example, nobody could have predicted just using the first peak or even the first two what the third was, because you need a few of these cycles before you can say there is a regularity. The first predictable cycle was the fourth one, because you had three, you established some kind of regularity. You could have made, you had to make a lot of assumption and really trust only 3 points because it's 3 cycles, and then you could have made a prediction. Now we had 4 data points. It was still not too much information, but it was some information. And now we know that it seems that we are not following a cycle. Now if we go to 200K, it could be okay. Yeah, there is still a cycle, and there are strange things happening in this cycle. We had some irregularities, but it's still a cycle. Because it has a peak where it's supposed to have a peak. Now I think if we do go to 200K, then we do have a correction. And the correction could be very strong. It could be all the way to a support line. If we go to a support line, usually it takes a year. We're going down back to 75, something like that. That will be interesting to see. We're accumulating information at this point.
Yeah.
But all these people talking about extended cycles, I don't know. Based on what? What is a logical argument? I would like to listen. I'm open. But make a logical argument. Don't just use your vibes. It's not a question of vibes.
Yeah. So then the next step is then what tools are you going to use depending on what you think the outcome might be. So I might share my screen quickly because I do want to show something. What's really interesting is, look, there's a big difference between a trader and a hodler and a Bitcoin maxi and someone who doesn't have much capital to deploy and someone who's got billions of dollars to deploy. So firstly, I just want to say that everyone's really, really different. But secondly, we all have certain tools available to us. Now, hypothetically, let's just say the price gets to 160K and you wanted to, you were concerned about selling a piece of, your Bitcoin holdings because you didn't want to miss out on upside. Well, let's just have a look at the Minotaur tool. So if we look at just the performance from January, the reason this is from January is that's when we started these live streams. So it's around, this is the one that I built for this live stream for us to track. But have a look here. This is really interesting. So right now, the buy and hold return is 24%. The net profit of the algorithm is 31%. So the algorithm itself is outperforming Bitcoin. Well, what does that mean? Well, it means that if you've got Minotaur, you can sell that portion of your holdings at the price that you think. Well, you think, okay, we're definitely going to go to 160 because I've been listening to Marcus and I can see the local liquidity and I think that there's a logical and reasonable argument and almost a scientific and data one that gives me that. So I think 160 I'm going to hold until, but above 160 I don't know, but I don't want to miss out on some of that upside. Okay, great. Well, you can allocate, you can sell, 20%, 30% of that Bitcoin, and then you could allocate that to a bot. Now, if the market does continue to keep going up, you now have a tool that's going to help you capture further upside, right? That's really important. That's a strategy you can use. The Minotaur Trading System is something that can fill that gap, right? As Giovanni said, options is another one. Options are fantastic, but they all have pros and cons. Options, for example, you have to get the timing right because you're going to be facing some theta decay, right? So there's a timing element. So if the cycle does play out in a way that's different, let's just say that we're looking at global liquidities extending, blah, blah, blah. Well, all these things could affect that. So all the tools can be used, but they all have strengths and weaknesses. The one thing that our system has is if the market goes parabolic, we'll tend to underperform Bitcoin. We tend to outperform Bitcoin when the market's extremely volatile and also when we have extreme corrections. So you've got to kind of pick your tool that you're going to use. And I think you also need to have contingency plans and strategies if you're going to try and increase the amount of Bitcoin you have. Because at this point, at the price that it's at, without any kind of tools and strategies, it's going to be very, very difficult to do that. And I know Giovanni is doing a bit of data. You're looking at the data and looking at how some of these strategies can increase your Bitcoin holdings. I think we had a chat earlier this week. What did you say? That if you're returning 1.5%, just 1.5% per month on your Bitcoin, what does that get you to?
So I'm going to make this stronger and stronger message of basically one of the most fundamental things I think Bitcoiners should do right now. You should try to find a way, and there are multiple ways, and all of them should be considered, and maybe a global approach should be to do all of them in different proportion, is that you should try to find a way of getting some yield from Bitcoin. Because right now it's possible, and it's not that difficult. If you can get, I just made an incredible graph. It should be something that, forget about DCA. I mean, you can continue to do DCA, it's part of the strategy, but it's really the main message, right? So even 1.5% of yield, and we can discuss a few methods to achieve that, per month, it's going to, and if you, particularly if you can compound that over time, right? So you get this yield, you buy more Bitcoin, or you buy some of a derivative like IBIT and so on, and then you continue this compounding. And this, remember, it's in addition to whatever Bitcoin exposure you have. So when Bitcoin goes down, this is a yield that will help you to set off a little bit your Bitcoin loss, your loss of, quote unquote, relatively to fiat, but it's still a loss, right? If Bitcoin goes to 70K and at a certain point it was 200K, it's a loss. Now, if you have some yield, you can use that yield to buy cheap Bitcoin. So it's very important to have that yield. But now, if you go up, now you are exposed both to the gains in Bitcoin and this yield. And the calculation is that if you have, and I use a 1.5 because I wanted to do something aggressive and a challenge, but at the same time achievable, very achievable. We're not talking about anything unrealistic here, right? Or retire with 0.1 Bitcoin, something stupid like that. It's absurd, but something like this is realistic, 1.5, right? Now, by the end of the year, you will get something close to 30% returns, right? If you do the compounding. And now you add it to what is expected from Bitcoin, if we follow the power law, in average, about 45%. We're talking about close to 100, right? And now this is equivalent to bringing Bitcoin back to when it was. I didn't do exactly the calculation. I said, going to do it. I forgot. You can do it. I probably, while you guys discuss it, I can do that calculation. But it will bring us back to having a Bitcoin that was maybe 5 years younger, 6 years younger, right? When we had much higher gains. And the result of this additional yield is that Bitcoin is supposed to go up 10 times in the next 8 years. So if you extend it all the way to 10, we're talking about something close to 15 times, something like that. Now, with this additional yield, you're going to have something close to 5 times your Bitcoin. So this is amazing because we are talking about, right, 15 pair from Bitcoin itself. Now you have 5 times more Bitcoin by this additional yield. Well, what that give us, right? Something close to what? So if we have a 15 times 5, 75, right? So that is life-changing money, to have the opportunity, because and people are chasing things like, shit coins, etc. for 100 pair. Say, 100 pair your money. Well, you can come close to 100 pair in 10 years, right? Again, it's not going to happen overnight. It's not going to happen next year. You have to have the focus, the discipline, the long-term vision. It's all about, not eating one cookie now, but eating 2 cookies in the future, right? Like that experiment for children. But it can be achieved. It's a very doable goal. And so this is why having a tool like the one you described that can produce that 1.5 yield, right? Because I'm pretty sure, and you can explain that cost better than me, when 1.5% on top of your Bitcoin, this is what we are discussing, is pretty achievable with the Minotaur system, right?
It's very achievable with the Minotaur system. The numbers that we're targeting right now are around 3 to 5% per month. Again, using Bitcoin as collateral, we always discuss this. We just refer to the wallet size. So the wallet size is what we base percentages on, our target of 3 to 5% per month. If you're using Bitcoin as collateral, we discount it. The safest way is to discount the value of it to the power law support, because at any moment, our hypothesis is that the power law support could be hit, because it's a range that is statistically possible, even though not always probable, but it is possible. So we want to be as safe as possible at all times. But yeah, Yuki, who just says, I have 0.08 BTC and I want to buy more. I can't think of a better way to do it than using the Minotaur trading algorithms to help you do that. If you can see from what Giovanni's saying, that even a conservative 1.5% per month, which we're doing very, very easily, can increase your Bitcoin holdings by 5 times. It's really a bit of a no-brainer.
It's like zero cost mining. You don't have to have ASIC computers in your garage, heating up your house, running up your electric bill, doing all kind of crazy stuff. Mine Bitcoin with an algorithm with software at zero cost. I mean, hello.
Yeah.
It's getting better than that.
That's right. Richard here's asked a question. He said, could you explain how would the bot respond in an extreme correction if Bitcoin went to 200K to 75? So it's a great question, but it's the reason we're here is that Giovanni's work is what unlocked essentially our strategy. And this is why it is a power law trading system, is that when we had the roadmap that Giovanni's power law gives us, including the power law support, which is that 75K correction, which according to him will be around next November, is that we're always programmed to protect at least to the power law support. You can also go to below that, but that means liquidation levels are below power law support. It means our deviations will extend all the way to power law support, right? So we've always got Giovanni's work as our roadmap, and all the engineering that we do is calibrated to the power law support. That's another important thing. We don't work off the power law mean at all. We actually work off the power law support, which is even more conservative. Maybe you can talk about that, Giovanni. But yeah, essentially we're programmed to absorb that shock, Richard. That's what I'm trying to say.
Exactly. Yeah. So that when I started to work with the Minotaur team, I was very, very impressed on these ideas, right? Because I thought for a long time how to integrate the power law into a trading system myself. And this is really the best idea, because basically you're saying, look, there is one of the most incredible foundation that we have over the years, right? And it's a foundation that is not just empirical, because we observe that there is this line and has never broken, even during a stress test like COVID. COVID really was an incredible test of this idea that there is something special about this support line. And it's not just an idea based on observation, but also it has some theoretical foundation. It turns out that if you go deeper, it has to do with the cost of production of Bitcoin. Basically, the miners stop selling their Bitcoin at a particular point. And that creates one of a few actually liquidity shocks that we observe that are really, at least let's say at a global level, not locally, and that pushes the price up. So it's something that it could be violated like everything, but right now it's really, really a strong foundation for any trading system. And incorporating it, because the problem with any approach like ours, that it's unique because we found all the parameters, we found how to optimize it, etc. But without that foundation, you will be kind of lost. It's like flying an airplane that doesn't know the altitude. That is, if you needed one single important parameter, right? It's
altimeter.
Okay, you want to know that nothing is in front of you, but you can use your eyes, right? And then with your altitude, right? And this is what it gives you. It gives you the altitude. Yeah. So it's one of the most foundational parameters that you can have. Now, we are also integrating all the ideas from the power law, but that is the main principle idea.
Yeah, and I wanted to add that I guess the way that most people, given the power law, would be thinking, okay, we've got this. They would be trying to work off the mean, and I don't know if you did this, but a reasonable approach would go, well, we've got the power law mean, and we've got oscillations around the mean. Well, if we're above the mean, we should short, and if we're below the mean, we should go long, right? But then what happens when you build a system like that is it's quite fragile, and the market can be irrational longer than you can remain solvent, right? So working around the power law mean would actually get you into a lot of trouble. And that would be because, and correct me if I'm wrong, Giovanni, is that a Gaussian distribution would be around, the center would be around the power law mean, right? Something like that. And you have this sort of, and you'd have these fat tails. Now, what traditional trading systems do is they tend to ignore the ends, right? The distributions at the end. They go, well, we can probably ignore these because they're statistically unlikely to get hit. But the thing with Bitcoin is that it actually happens every 4 years. We've got the cycle peak and the cycle crash, which is far more often than a Gaussian distribution would give you the idea of, right? Is that right, Giovanni, as well?
Correct. You know all this pretty well.
Okay, so what that means is that the way that we've built Minotaur trading systems by using the power law support means that we actually thrive in chaos by deploying the majority of the funds at the final 1% distributions creates more of an anti-fragile trading system, because what we're doing is we're basically engineering for chaos, not the other way around. Now, I don't know of a trading system that does this. It flips it on its head, but we have to flip things on its head because we're not dealing with traditional markets. And mean reversion strategies historically have blown up some of the biggest funds in history. If you study hedge funds and hedge fund history, it's the ones that think the market will remain rational are the ones that get destroyed, right? Because they and to be honest as well, if we deployed most of our capital around the mean, we would probably make far bigger gains until we don't, right? It'll work until it doesn't. That's the problem. But as far as we've been doing it since we brought in the power law theory, every single simulation that we've done has survived because it's the soundest way to trade Bitcoin. And then, someone just asked the question, what would stop you from acquiring a system like this? I don't know if anything would, because it seems to be the smartest, unless you can think of another way. And if someone came up with a smarter way to do it, I'd buy that too. I'd use both of them. This is what Giovanni is always saying, that there's lots of tools, right? Use what you want. Use all of them. We do options as well. There are a lot of things we can do, but if you've got a good tool, it's a good tool. Whether other people have tools or not, it doesn't really matter. Use that tool. Use the electric drill and then use the electric brush. But I don't know. At the moment, I'm putting my eggs in our basket. And we've got Giovanni there to prove it as well.
That's right.
Well, look, listen, in theory, everything can be reproduced, right? I could try to make the same rockets that Elon Musk makes, right? Okay, good luck, good luck. It's not impossible. It's the same physics laws, you can discover how they did it, etc. It's not that. Look, I work in creating trading system for almost 20 years myself, and some of them were very successful. I had a single bot that made 6 pair. I made all the time I mention this story. He made 6 pair in one single month, relatively to Bitcoin. You could have put 1 Bitcoin. This was in December 2017. We did it. My son put 1 Bitcoin in this system at the beginning of a month. We got 6 Bitcoins at the end of the month, while Bitcoin was doing something unbelievably crazy, because it was one of the fastest run up that we ever had, right? You can do it, but it's not easy to be consistent. Exactly. To be consistent over the years, to do it with the right tools, to be and when I saw this system, I fell in love, because I saw how reliable it was, how precise it was, how consistent, how robust. Robust is one of the things that people dismiss all the time, because whenever you do this trading system and you play with it, and there are times where you push it so far, you can change the parameters, right? When I did my many different instances of trading system, I will push the parameters where I will get incredible results. I will say, wow, and even if intellectually that probably is bullshit, you get excited because say, wow, this time I got it. I'm going to transform lead into gold. I'm going to be the richest man in the world. It's usually bullshit.
Yeah.
And you go and you check, right? These parameters can work under very, very specific circumstances. You basically push the system in a direction that is unrealistic, and so on and so on. So having something that works in so many different circumstances, that is robust, that it does. Why will you want to reinvent the wheel? That is the entire thing.
Yeah. I wanted to just, that's an interesting point about the back testing. So I've come to the understanding that because we get a lot of people that have the algorithm, because obviously when you license the algorithm, you have access to it and you can engineer and do it. But a lot of people say, oh, I did this back testing period and it outperforms the settings, and this outperforms the settings. And it's like, yeah, but you're backfitting. You're always backfitting the data, right? Because what you have is you have the price history, and then you're adding inputs. And every time you adjust the inputs, the performance is getting better or worse. And if it's getting better, you're saying, oh, well, if I had these settings, I would get better returns. Well, the problem is that that's if exactly the same price action in the past happens again in the future, which we know is not going to happen. So the settings that we use that sometimes we get pushback on, we get people. There's a lot of discussion around the settings. You have to understand is that the settings that we give our clients, they're not backfitted on past data. What we do is we use the power law bands and ranges and support as a way. So we take what the power law gives us, we create the settings, and then we simulate environments, including randomized price action, right? Which would then, the outcome always works in a predictable way, right? And what we get this, no matter how many ways we do it, is that we can stress the system, and it gets us around that 3% to 5% per month. If you try and push it more than that, there are scenarios where it will explode, right? Where it will not work. And this is why our out-of-the-box settings are programmed the way they are. It's because we want all our clients to be as safe as possible. We want them to survive the black swans. We want them to always, we have to imagine that you do nothing for a year and come back and look at your account and it's up based on the targets that we gave you. So, Marcus does some more advanced trading and a bit more advanced. Someone asked about shorting. Yeah, you can short with our bots as well, but it does require active management. So there are levels to this. The algorithm itself is like a Swiss Army knife. You can do what you want with it. You can set up 100 bots if you want, all doing different things. But it all comes down to what's the foundational principles around what we've done and what are the foundational settings. And they're the ones that we give you out of the box. And then after that, you can you can do what you like with it. And that's another thing that we've had as a company. We've decided that if we're going to give people the algorithm, they have the right to experiment with it and engineer it in the way that they want. All we can do is give you general guidance on the experiences that we've had with it. Do you guys want to add anything to that?
Yeah, and I will never base anything trusting on what people say. Of course, you want to integrate the information we are giving you. Many people contact me and say, oh, I decided to go ahead and buy these because of you, Giovanni. Never do that, right? Never trust. And the entire idea of being a Bitcoiner is that you don't ever base your major decision like this on trusting people. You want to trust the math, you want to trust the data, the information, and so on. So the information is there. Study the system, ask questions, right? We can provide you all the information that you need and make your own decision. I will start to learn how to get some kind of yield. Like there are all these tools like options, for example. Teach yourself. I'm trying to make some classes about that. And I insist on this because I want to give you this power, this feeling of empowerment. Once you start to see, oh, I can hold my Bitcoins, I don't have to sell them. And on top of them, I can multiply my Bitcoin. Not just by doing DCA, because that means simply you're using fiat that you should still do.
Well, you need more money for DCA.
Right, but you need more money, right? But you can use your Bitcoin to multiply your Bitcoin. And it's not something that we are trying to, it's really achievable nowadays. And don't even try to get this goal of 1% a month. Try to do 0.5%, even a few $100. Learn how to do some options, so covered calls. Many people are covering, are showing how to do this. We have a Discord channel where we discuss these topics all the time. You can join our Discord channel. It's a small investment. You basically became a Patreon of mine. So learn this, get as much knowledge as possible. There is some urgency because more time you let go, less opportunity you have. Remember, Bitcoin has diminishing returns. So we are at a certain window of time, but it's a 10 years long. So 1 month more, 2 months more is not going to make a big difference. Learn, understand, maybe, the best thing that you can do at this point, look, we have a link, and you can also DM me. I can send you a link personally. Look at this link that is here, that is scrolling down, and book a call. Talk to our team, discuss with them. They will give you a lot of information. Sit on this information. Contact me, DM me, ask as many questions you want. We can discuss it in details. And, once you have all the information, if you see that there is logic, there is knowledge, there is alpha, then make a decision, and that is the best advice that I have. Knowledge, it's important to have a lot of knowledge with these kind of things.
Yeah, I agree.
All right.
Marcos, do you want to add anything to this? What is your perspective?
I'll just jump in with the same logic that I use personally, because I do it, and maybe it can impart some wisdom to others.
Because you were also a client at a certain point, right?
Yeah, of course. But here's the reason why I am.
What made you become a client? What
Yeah,
was
I'm going to explain that.
Good.
Let's keep things incredibly simple, right? What's the best digital asset, or arguably the best asset on the planet currently? It's probably Bitcoin, due to its liquidity.
No, sorry, you made a mistake. It's not probably.
It is. I'm just trying to give an objective, not so biased approach. But in my opinion, Bitcoin is the absolute most superior asset currently that exists for humankind. So we check that box. So then if you know the best asset on the planet, better than real estate, better than restaurants, better than your grandmother's land that she's going to give you or whatever inheritance, this is the best asset to accumulate. So now that you know the best asset to accumulate because of its securitization, its value, its liquidity, its access, all of the things that we love about it, then what's the best business model to acquire more asset? Well, you look at the biggest players in the game, right? We have to understand the marketplaces that we invest and trade in. It's the market makers, it's the Citadels, it's the Black Rocks. And what do they use? Do they do discretionary trading? Do you see Larry Fink saying, "Oh, I'm going to buy this, I'm going to take this position and I'm going to buy some calls or whatever"? No, they use Aladdin. It's an algorithm. Market makers use algorithms, and these algorithms are eating the entire world. They're dominating all asset classes. So guess what? In a world where 90% of the trading volume is algorithms, then you might want to hotwire or acquire your own algorithm to level the playing field. So they're already showing you what you need to be doing. You have the asset. Now the most superior tool to accumulate the asset is a trading algorithm, just like they use. Very simple. Do that and go forth and succeed and live happily ever after. Simple.
Very good.
Mic drop.
Do you want to look at some of these questions? I think we will answer most of them.
Yeah, there's some good ones, but yeah, I don't mind.
Okay. So this one about Howell. I think I answered about these. I follow Howell. We even at a certain point I even interviewed him.
He's the godfather of liquidity.
Yeah. He's one of the global experts in understanding global liquidity, and I actually like this work because they use a lot of scientific tools, like it's looking at Fourier transforms, for example, to calculate periodicity in the data. And they observe this, I think it's a 5.5 years cycle. I don't remember, but
Michael House says that we're in the risk portion where.
Yeah, and we can look it up. Maybe next episode we can bring some of his graph. And at a certain point, I don't know about this latest revision. I need to look it up. But at a certain point, it was because his cycle is a little bit longer than the
Right.
typical 4-year cycle of Bitcoin. They
Right.
don't always align. But this particular cycle, they were supposed to be aligned, because actually I don't have he has a proprietary method to calculate this cycle,
And
but
he's saying
I
right now
kind of,
we're in the risk on phase, which is going
yeah,
to propel Bitcoin.
I kind of superimpose this cycle because I could see where the peak is, the period. So I made my own kind of reproduction of this cycle, and it seemed to be superimposed very close to where we were supposed to have the peak of this cycle according to the 4-year cycle of Bitcoin. So sometimes cycles that have different periods, so they can align and they can influence each other in that way. But I don't know, it doesn't seem to matter. Now,
I
if
think
he's saying,
I think it's a good thing. I mean, one thing I like about Michael Howell is he drives the point home that we're not using a production model anymore. It's all driven by credit and liquidity, which is the
mhm,
easing and central banks injecting monetary
yeah,
policy. So that's the
yeah,
absorption for all that inflation is Bitcoin. It's going to go to high risk assets or assets
But
like Bitcoin that can absorb it, and
right.
it's good for
but
Bitcoin.
but just to add to this, how can you be cycle agnostic when there's clearly a global liquidity cycle? It just
Yeah,
doesn't make
it
sense
is.
to me that there's not going to be a cycle. It just
It is.
I
Yeah, it's just how big it
It
is.
might be more extended
yeah.
this time, but yeah, it will be.
Yeah, we are going to study right now. It seems that there are some strong anomalies, with this cycle. So it's not exactly doing what it was supposed to do. But I will find it also very weird that we don't have some kind of extreme
Boom bust
extended.
cycles.
Yeah. It's because there are cycles in many
And
financial activity, and Bitcoin is not an isolated system. It's doing its own thing, following the power law, but also there are external influences that change the oscillations. Um, and it's possible that we will continue to see some level of oscillation.
and I discussed this. I did bring this up last time, but I had the position where the cycles are probably one of the greatest reasons of Bitcoin's adoption, right? Because it's the Bitcoin becoming front and center of the news, of speculation, whatever it is, of FOMO is what's required. Like all of like us, I started buying Bitcoin at the top of a cycle, right? Because everyone was making money. That's when I got started. I didn't get started at the bottom of the cycle. I FOMO'd in, right? I lost a bit of money. I FOMO'd in. And that's how I learned about it. And that's how I started buying more. I assume most people are like that. So, I argue that the cycles are a natural part of the growth of the process of the network adoption. Without the cycles, will the network even adopt at a parallel rate? I don't know. I think they kind of exist because of one another, right? They're like a yin and a yang in a way. And
I
I
don't
don't know.
know.
That's my
I
position
think
on it.
the cycle is on top of the power law behavior. I think in theory you could have no cycles and still have a power law. Um, it's more than probably the cycles were influenced by being deviation from the power law, but I'm not sure we need
Right.
the
But there's still
cycles.
And those
there's no existence of Bitcoin without a cycle either. So
and
you
then
can't either dismiss that, right?
and those deviations are created by capital, credit,
Sure.
Correct.
and liquidity. That's what's driving the cycles because all that easy money goes into assets like Bitcoin,
Yeah.
which propels the price outside the mean. So yeah,
Okay.
Neil's
So
got it.
then there is this look at this question.
Oh, yeah, this is a good
All
one.
right, my man Neil, how's it going, my friend? He says, "What do you think about us correcting before the last leg?" Okay, well, we're coming out of a correction now, which is really just an accumulation that the institutions and market makers are doing. We may have one more before we reach the top of the discovery. One,
I think his
so
next question shows from 150 back down to 120, just to give you some
yeah.
more
But the
context.
good news is these. I want to drive this point home. These corrections that we're going through, like we're just going through one that's over almost 27 days, that just gives you plenty of time to set up your positions, to acquire more asset, do things you need to do, take some leverage, build positions just like they do. It gives you time. You don't have to rush. If Bitcoin was just going to race straight to 180, where are you going to get in at? How are you going to set up your positions to capitalize on the moves? I love this price action where it goes up about 20% and it just goes sideways for a little while. That gives you plenty of time to just build and invest and set up for the next move. So corrections in this type of price action is very good. But yeah, we may have one more.
Okay, so
Mm.
let's see what is the next question we can look at. Okay, this one. You stop. This is a very net. I don't know about Netflix. There are a lot of interesting things about that. But you know what? Since I started to adopt the Bitcoin standard myself, I see myself. I know it doesn't look like right. I'm working on it. But when I go to a store, I see a lot of things. Like, oh, these cookies are very nice. And then I think, do I really need the cookie? Not just from a health point of view, but also
How many Satoshis could you
I
have
I
bought?
could buy, yeah, exactly. I could buy some Bitcoin with that. And so no, seriously, it started to influence my way of thinking about everything. Right, I live in a small apartment. I don't need all these flashy things. I'd rather focus on my long-term goals and continue to do DCA, invest in Bitcoin, etc. So I'm
Let
very
me
glad that
let,
you're
let me
starting to think
let
in
me
that
take
way.
a quick shot at this number. The second part of the question,
Yeah,
besides the Netflix, he says at which price that you start selling it. Well, think of it this way: if Bitcoin is a replacement for real estate or other types of business models, as long as you can generate cash flow from the asset, and the asset is the foundation, would you ever really need to sell it? The only reason you sell things is when you need to harvest them to generate more capital to redeploy the capital for more asset. If the asset itself is like vacant land, if I got vacant land and I got to sell it, but if I got apartment complexes on the land, I'm going to collect the rents. And I'm never selling the apartments. So if I can generate cash flow off my Bitcoin, then there's no motivation to sell it. And that's what we do with the algorithm. We don't have to sell it because the algorithm is generating the rents or the cash flow. So as long as I can cash flow it, I'm not selling it. Simple. I'm acquiring
yeah,
more.
absolutely.
Uh-uh.
And then we have these Adam. Look, I respect Adam. He's one of the fathers of cryptography,
Okay.
applied to
All right.
Bitcoin, etc.
This
He
one's for
was an
you. This one for you, Giovanni. He says it will be, even the power law will be broken.
yeah.
What do you got?
I'm responding into
Mhm.
it.
So what do you got
so
for that?
I like Adam, right? But
Uh,
and he should be respected and acknowledged. He's one of the OGs, right? So
all
he
right.
was there like together with Satoshi. But
Okay.
that means, it doesn't mean that somebody that is very good in one skill is good in another. He is not very good in price prediction. He made prediction about $1 million Bitcoin, for this cycle and other things like that. He liked plan, stock to flow. I had a conversation with Adam one time about stock to flow, and once I showed him all the flows of a model, you know what he told me? Well, okay, but I told him about power law. Of a power law much was a superior model. He say, well, but it's not a good marketable story. I was very surprised by that comment. Like, what do you mean? It's not about stories, about truth. What Bitcoin truly does, not what is marketable or not. So I don't know. I don't take him very seriously in terms of his ability to predict anything about the price of Bitcoin. He has his own expertise, that is great. He's an OG, but he's not a good analyst at all. Um, yeah, and what he's basing his ideas on? Nothing. It's vibe.
All right.
Vibes.
All
Like many other analysts, vibes.
right. Moon
Uh,
cycles, huh?
yeah.
All right. All right.
Okay.
Ayahuasca.
Uh,
There's a
I'm sorry, no, but it's the truth.
there's a follow-up question there about the selling at the top. And I
Yeah.
just want to mention,
Do you
yeah,
know
there's
which
a
one it
there,
is?
yes,
Which one?
the same
I
guy,
could add something to that
D
too. Yeah.
DCCS, the same gentleman.
Okay.
Uh, I think one thing about that classic mentality, yes, I would say for me personally, that was pre ETFs, right? I would probably be more inclined to sell at these banana zones and all that. But now that we have the ETFs and we're going through this corporate treasury phase and all this type of stuff, Well, if you think about it, the ETFs and these corporations, they are going to protect the volatility. If you're running a big fund, you don't want a 80-90% fluctuation in your fund value. So they're going to add buoyancy to the market. So these corrections might not be as severe as they used to be. And if the corrections are not as severe as they used to be, then I'm not going to be motivated to sell. I'm just going to keep collecting rent. I'm going to keep getting cash flow because my portfolio is not going to go down 100% because the ETFs and the corporations are not going to allow that to happen. So that's my.
I can add to that. I think it's a two-step thing, right? You have to look at deviations from the power law mean. It depends how overextended you get. Now, there is a like Giovanni said, in the perfect world, if you knew you could sell high and buy back low, you would do it, right? Now, if the price is 138 according to power law by the end of the year, and the price gets to 160, it stands to reason it's not that logical to sell, right? Because you're taking that risk when the upside is not huge and you might screw up the timing. Now, if, for example, we get to 180, 200, 220,000 at the top of the cycle, then I think the argument has a lot more weight because it's at that point where the chances of it rebalancing back down to at least the mean, right, is going to be much more significant. But then you've got to ask yourself, well, how much of it would I sell? And I get asked this question a lot in my mastermind, and my answer is, if you are going to sell your Bitcoin, just sell. Keep what you can always, what you would never want to live without. For example, if you tell yourself, I always want to have at least 1 Bitcoin or 10 Bitcoin or whatever it is, 5 Bitcoin, then just sell what's more than that, right? If you've got 16 Bitcoin and you say, I can't live without 10 Bitcoin, then only sell 6 of them if you want to do that rebalancing, right? And you think the market's that far extended. So I think there is a little bit of, there is a reasonable argument to make that if a market is very overextended, the logical thing to do is to rebalance, to sell, to take profit off the table and buy back lower. I don't know any of the biggest traders of all time, like Paul Tudor Jones, a commodities trader. I don't think he holds onto oil forever just because he likes oil, right? If the price gets too extended, he will sell it and buy it back if he thinks it's overvalued. So I think the Bitcoin community is susceptible to, because I guess people love the assets so much that, and this whole idea of never sell. But if you translate that to any other markets, any professional trader will always sell if a market becomes too overextended. So then, use the two-step process that I said. What can't you live without? Never sell more than that. If you can't live without Bitcoin, 1 Bitcoin, never sell more than 1 Bitcoin, right? You got to like have a plan and stick to it. And also, I wouldn't be trying to predict the cycle unless it was severely overextended, which then increases the probability of a correction. And then that's how I would play it. And will I play it like that? Yes, I will, personally. I will. If the market becomes too overextended, I will figure out how much Bitcoin can I live without. That stays in cold storage, and then I will rebalance the rest. There is a point that I will sell Bitcoin.
I agree with that too. Yeah.
This is how it is. But I think about this all the time, all day. This is my job. So
and it's not because we are focused on fiat, because I know all these, look, it helps sometimes to have kind of almost like a religious view on things. I know, like, for example, if I decide to go to a keto diet, I need to be extreme. Like, I'm not going to have a day when I can do something different, right? Because if I do that, then I relapse, right? So you want to be focused on things and you make it almost like a mantra, right? I understand these kind of things. But with something as important as your future, I will never try to be that rigid. You need to be, all of us are hodl 90% of your assets, right? And then with that 10%, 15, 20, whatever that is, do things, that is options, maybe selling at the top. If you have any information, any alpha, that this is the top, and we buy at the bottom, rebalance your portfolio, do all kinds of different things. Because over a long period of time, you will have a better outcome. So that is the main idea. Be flexible, be like water, don't be rigid.
And I think another point to make is, because I've got a lot of people that will be like, well, what about what Michael Saylor said? if I had 600,000 Bitcoin, I wouldn't sell any of it to try and predict the top of the bottom of the cycle. It's pointless.
Exactly.
I just
and even there, maybe you will
pointless.
be a little bit more clever when to buy them. This idea.
Yeah, correct. That's exactly right. Yeah.
It's not. I don't know.
But again, when you're doing it with other people's money, it doesn't really matter. Like I can have that position too when it's other people's money, right? So again, it's like, well, if you've got so much wealth, and it's not even worth the stress of trying to time the markets, but I need to multiply my holdings. Yeah. So I have to do something else. This is what Giovanni's constantly trying to say. Giovanni never told anyone sell your Bitcoin at 200K, and but all he's trying to say is that if you're looking for a strategy and you look at the data and you look at the history, this seems to be one of the soundest ways that you could multiply your Bitcoin is obviously to sell the top and buy back into the bottom. That's not a controversial thing to say. No. And in another market, it would not be contrarian, but it's highly contrarian in this market. But any other market, it makes complete sense. So I don't know.
Yeah. Okay, guys. Let's see if there is one or two more questions. What about this? Did we answer this?
Yeah, Marcus answered this one. Yeah.
Yeah, I answered it.
Is there a trial period for a bot?
Yeah, so there's no trial period for the bot, and there's for a few reasons. It's really complex to actually onboard people. We have to share the algorithm and the IP with you on TradingView. You need to set up accounts on your exchanges. We have to have support team join. It's just too complicated. We can't trade paper. We can't paper trade the algorithm either. So it all has to be done on live accounts. So, the answer to that is no, because it's too complicated. And the second answer is that we have enough people that join without even wanting a trial that it just makes no sense to even build the resources out to give people a trial. What we've chosen to do instead is work with people in the space like Giovanni, people who are the respected influencers that can verify the results. And, we have these conversations online. So if that's not enough to convince you, I don't know what it is. So, that's my thoughts behind a trial.
And what about this question?
This is an interesting one. So again, you have to understand that what we're doing, that the strategy, the missing piece to the strategy is the power law. None of these assets have the power law. Now you can trade the style that this algorithm uses on other. You can when you have the algorithm. When we send it to you via invite only on TradingView, you can apply the algorithm to anything, and it works, right? It works particularly well with assets that appreciate over time, something like the S&P or one of the Magnificent Seven. If they do appreciate forever, but gold. So it works on all these things. But the issue is the engineering. How do you program the bot? What inputs do you use? So the reason that we know what to do with Bitcoin is because we study its price action, we study the data, we have the power law, and it gives us a framework that beautifully executes our trading strategy, right? But the trading strategy, in theory, can be applied to anything. I guess that's the answer to that. So the answer is yes, it already works on the stock market. The question is, do you want to use it on the stock market? It is a little bit hard to deploy it, though, because of the way the brokerages are anyway. But I do know that in the future, we are working with an exchange that's going to integrate with our software, and that exchange is a crypto exchange.
Yeah,
and they do have access to stocks, right?
And there is Alpaca here in the United States.
Yeah.
That has actually an API that is very similar to that one of the exchanges. And a good idea could be maybe a strategy to trade.
Well, I was going to bring that up to you actually privately, but we could talk about it now. If you can find a bot,
I beat because I beat that. A lot of people maybe don't want to be exposed to Bitcoin, or they don't have leverage on Bitcoin. But you could do it with IBIT, right? And there be other things like maybe there be futures IBIT.
I think strategy is a good fit. I think we just need to work out where the bottom is. That's the biggest thing, because I think the volatility is there. And I think you could probably trade it. It's high volatility and larger take profit. Yeah. I think it would be incredibly profitable. But we're not there yet. But we are going to work towards that. Yeah.
But then again, we are the leaders in crypto. That's what we do. and we do it exceedingly well, and we focus on that, and we are the best at that as a byproduct of that focus.
Yeah.
We don't want to trade these other assets. You also have to keep in mind that
Yeah.
these legacy assets are very efficient. The gains are in crypto. The easier targets are
Right, yeah.
crypto.
But MicroStrategy is basically is a power law. I found out that is a power
Yeah.
law of Bitcoin, so it could be an interesting thing to trade. It's just that look, we are a relatively small team. We are improving the system all the time. We are limited resources, and we rather make perfect what we already have
We do.
than expand in
Yeah.
other direction. That is
Yeah,
another
that's
thing I want to say about the integrity of this team, because they could do a lot of money by saying, oh yeah, it works on this, it works on this other, buy it, the focus is not that, is let's make
Well,
what we
yeah.
have.
It works on
Perfect.
Dogecoin, right? It works, but
Any
you don't want to
crypto,
run
we
it
do any
because we
crypto,
know,
yeah.
yeah,
Why
it
would
works
you
It's
on
a
do
matter
anything.
of integrity. It's a matter of integrity, focus, wanting our members, our clients to be successful. We want, that is our priority number one, because you are us, we are in the same boat. We trade with the same system, so we want to
Correct.
perfect what we have first, and then later maybe we can do other things.
Yeah.
Yeah,
Anyway, I think this covers it,
that's pretty
most
much
of it, right? I think we covered a lot of material,
Yeah. Awesome.
a lot
All
of
right.
alpha. Let's see each other next Thursday, same
Next
time,
week.
same place. Bye, guys.
see you next week.
Ciao.
Stay tuned.
Bye, everybody.
Bye.